Monkey has grown and now has to pay taxes for the rest of his life. So now Monkey thinks it is unfair when he gets very few bananas and still has to pay a lot of bananas to the monkey government. While some rich monkeys scream publicly they don't pay anything. Now Monkey has to learn what rich monkeys do in order to survive and don't lose those hard-worked bananas. Monkeys have two ways of paying less bananas to the government. The first is known as tax evasion, the second is tax avoidance. Rich monkeys tend to use tax avoidance, which needs a lot of investment and knowledge of the monkey law, while middle-class monkeys use tax evasion, which is risky and gets some monkeys into prison. Monkey will explain you how this works, so you don't get on monkey prison. Number 1. Tax evasion. Tax evasion means that monkeys break the law, so they don't pay banana taxes, usually by hiding their bananas and lying to the monkey government agents, so they don't know about it. Tax evasion is illegal and can get a monkey on monkey jail. Let's say George wants to buy an apartment from Joe the gorilla, so they agree to price 1,000 bananas for the purchase. But if the tax rate is 10%, then Joe the gorilla has to pay 100 bananas to the government and keep 900. So George and Joe the gorilla agree to lie about the price and report the price as 500 bananas. By doing this, George still pays 1,000 bananas to Joe, but now Joe reported only 500 bananas, so he has to pay only 50 bananas instead of 100. This is called underreporting income, so if they get caught, they might go to jail. Another monkey trick is to report false deductions. Let's say Carl the chimpanzee has a car wash and he has an income of 1,000 bananas. If the government has a tax rate of 10%, then Carl the chimpanzee would have to pay 100 bananas. But instead, Carl makes a remodel of his car wash. Let's say he pays 100 bananas for remodeling. So now his income is 900 bananas. So he has to pay 90 bananas instead of the 100 bananas he would have to pay if he hadn't remodeled. But now let's say Carl the chimpanzee wanted to deduct even more taxes, so he falsely reported the remodeling expenses as 600 bananas instead of 100 bananas. This way he gets an income of 400 bananas, so he has to pay 40 bananas instead of the 90 bananas he would have paid by reporting the true price of the remodeling. Look how the difference is massive. So there are more ways of evading taxes, but generally speaking we can conclude that evading taxes is illegal and can get you in serious trouble. However, there are legal ways to pay less bananas to the monkey government. This is called tax avoidance. Number 2. Tax avoidance. Tax avoidance is using the monkey law on your favor by using legal tricks to pay less taxes in front of everyone. This is the reason why rich monkeys can talk about it and don't even bother about it. The first method is called transfer pricing. Transfer pricing means that monkey owner of a company place a new company on another country. This company is called subsidiary. We will take corporate Monkey World as an example. Let's say corporate Monkey World on the United Monkey Land creates a subsidiary company on Cayman Monkey Island. This company will be called Monkey Corporate World Cayman Islands. So the company decides that Monkey Corporate World Cayman Islands must have the copyrights and patents of how to make bananas with peanuts and sauce. So when Monkey Corporate World sell its bananas on the United Monkey Land, all copyright and patent expenses goes to Monkey Corporate World Cayman Islands. So the company pays no corporate tax on Cayman Monkey Islands and pay much less bananas on the United Monkey Land, as all the bananas went on copyright and patent expenses. Other method is the use of dividends. Take for example Warren Monkey. Warren Monkey's main source of income are from dividends and long-term capital gains, which are taxed on the United Monkey Land at a rate of 0% to 15%, depending on how big is the taxable income. So if we suppose Warren Monkey earned 100,000 bananas from dividends, he would have to pay 15,000 bananas. Instead, his monkey secretary earns an ordinary salary, so salary taxes are around 22 or 24%. So she have to pay more bananas. This concept is known as the poor tax by the community. Tax deferral is basically postponing the payment of income tax until the investor withdraws his bananas. Tax deferral is encouraged by the monkey government to stimulate long-term saving and investment. For example, let's say Christopher, the mandrill, earns 60,000 bananas on a year, so he would supposedly have to pay 12,000 bananas for 20% income tax. That's a lot of bananas. Now let's say Christopher, the mandrill, contributes 5,000 to his 401k. Now his income is 55,000, so he would be paying 11,000 bananas instead of 12,000 bananas. And you don't pay taxes until you retire your 401k. Other way is to use 1031 exchange for real estate. You buy a house for 200,000 bananas and sell it for 350,000 bananas. By gaining 150,000 bananas, you pay a tax of 30,000 bananas, but instead you use 1031 exchange and invest all the 350,000 bananas in a new house. By doing this, you pay 0 bananas in taxes until you sell it again with no 1031. So the difference between tax evasion, tax avoidance and tax deferral is that tax evasion is illegal, while tax deferral is postponing the tax to a certain point of time, and tax avoidance is to not pay taxes by legal means. A lot of monkeys confuse tax deductions with tax credits, but they're not the same. A deduction reduces your taxable income. Let's say you earn 10,000 bananas and deduct 1,000 bananas. Now you're taxed on 9,000 bananas. A credit, on the other hand, reduces your actual tax bill. So if you owe 1,000 bananas in taxes and you get a 200 banana credit, now you only owe 800 bananas. Let's explain this with Monkey Elon Musk. Monkey Elon Musk has the most bananas on the planet, so he must pay the most banana taxes, right? The answer is no. This is because Monkey Elon Musk doesn't get paid with bananas but with stocks of his own company, the Banana X, and cover his expenses by borrowing bananas. So he doesn't pay monkey taxes until he wants to sell his stocks. In conclusion, tax evasion may be compensating, however is dangerous and illegal, so monkeys have to be careful with this one. While tax avoidance consists on using monkey laws to pay less taxes on a legal way. Now you know how to make a monkey out of the IRS gorillas. Good luck.